Hey guys, Rob Mitchell here. Thanks for joining me for this day trading smart momentum secrets mini webinar, broad concepts and market structure. I'm going to show you some really cool ways that you can trade very simply using momentum, and a little bit about the smart momentum that we've been using for a long time, and it's one of our most popular indicators by far. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. Now, this is a special edition because this is a holiday mini webinar, and there's also a sale going on that you can check out in the details. If you go through the webinar, I'll put it in the, I'll post it below, and that you can take advantage of this weekend. But I'm also mailing this out early so that you can benefit over the holiday. Yep. So in this video, I'm going to share some important day trading concepts, advice, and secrets that can help you up your trading game and boost your trading. You can benefit from the concepts I'm going to show you here. It doesn't matter if it's in the E-mini S&P futures, crude oil, or any reasonably volatile futures market that you can day trade in. It involves just simply aligning yourself in a positive way with traders who can carry your trade to success. You can also use this method to understand many other key market concepts. Super important. In other words, I'm telling you more than I'm just telling you if you give it a little bit of thought. Yeah. The concepts shown in this video are intended to show you what to look for and how to look for it. And it can help you to narrow down and to begin to learn and understand what tradable patterns look like using these NinjaTrader trading tools, indicators, and add-ons. And why don't we just package this as an automated trading system and send it out to 40,000 people? Well, because any system that did that would be self-destroying. And so what I do is I package these things in a way, I show you how to use the tools, and you can automate it yourself if you want to. But anyone who ever bought an automated trading system knows that what I'm saying here is true. I saw one vendor, they were bragging that they had sold over 1,000 of the automated system. Well, you're talking about 1,000 contracts being executed on one tick in one of these markets. It's just not going to happen. Yeah, it's not going to happen successfully. And so what'll happen is if everybody's in there trading the thing on the same tick, it's going to be a problem. Yeah. So I'm trying to save you the trouble by packaging the way that we do things in this way. I've been doing this for over 30 years, and I love trading and I love teaching. And so I'm trying to show you here how you can fish and not to hand you one so you can have and enjoy a meal on another day and another and another. In other words, concepts that I teach in these videos are solid, and they use tools in a similar manner, and the probability for your success goes up. You can check out testimonials on the bottom at IndicatorSmart. We have lots of happy customers over the years that have been successful using these tools. Does that make it easy? No. To be successful as a trader, you're going to have to probably unlearn a whole bunch of stuff that you thought was true that probably isn't. I don't always post the testimonials, and I don't solicit testimonials. I never incentivize somebody giving a testimonial. You know, like we'll give you a free indicator if you send in a testimonial. So we have all kinds of testimonials that are from people that just wanted to get something. Yeah, we don't do that. And they're unsolicited. And so when they come in, I'm really happy. In fact, nothing makes my day more than somebody telling me about their success. I just love it. So how do you define and understand market structure, price action, and momentum can have a huge beneficial impact on your trading if you understand a couple simple concepts that we're going to explore here. Okay, I'm going to start going over some market structure concepts that we've covered in other videos and that I've been teaching for years and years. In fact, everything that we do is based on this simple concept. We define market structure by a basic A, B, C, D legs on the price bars, okay? This is like a totally baseline concept for understanding market movement. I really, if you don't know what this is, I recommend that you take some time and learn it. Those who would try to jump forward and not get it are harming themselves, in my opinion. Yeah, so an ABC leg in price is just where you make an extension, say it's going higher, you get a retracement in the B leg, and then or the B to C leg, and then it goes out to a new high or new low on the next leg. Yeah, and so you get A, B, C, D. Yeah, and some you might have heard it in the past. Oh, 1, 2, 3, 1, 2, 3, 4. Yeah, I like A, B, C, D, and so we've used those terms, and um, and you generally want it to be bigger than one reversal bar, and we're going to see on a chart here in just a minute. Yeah. The simplest form of it is just simply red, green, red, or green, red, green on the bars. You couldn't get any simpler than that, but it needs to go out to a new high or low in the process, and preferably more than just a reversal bar. Yeah. Everything to the left should be the same color as the direction of your trade, and I'll probably also cover that when we go look at the chart. Yeah. So today's pattern is super simple. Setting up with the market structure, just A, B, C, D kinds of structure. If it's violated, you probably want to stay away from it. You don't have to. I'm just telling you that that might help you out. The following terms apply. Number one, excess orange. What's excess orange? When smart momentum goes outside the orange in the direction of the price or the ABC movement of the price. Yeah, ABC, ABCD, movement of the price. Excess orange, you're going to see on the chart an orange line on the momentum. Yeah, and it goes out excess orange. Okay, and then when the market comes into the retracement, that's the BC leg. You're going to see the market's going to go counter, to the excess orange condition. In other words, excess orange would come first. And then if it doesn't break the opposing orange, it's what we call defended. Yeah, before it turns, back in the same direction, it's defended. Now, in the case that it does break it and it comes back inside, the momentum went outside orange. In other words, going in the other direction. It did not defend, and then came back inside in the direction of the pattern. That's all going to become clearer. You can come back and look at these, or you could screenshot this and read it. So for the following rules apply. Look for excess orange, step one, step two, followed by defended orange, and if the defense is broken, consider inside orange. Let the momentum slope trigger your entry, and it's just that simple. Yeah, okay. So let's look at a chart given all that. Okay. Okay, this is just today. I just chose today. What are we going to look for? Okay, we start the beginning of the day, A period here, and we go A, B, C, D. Yeah, A, B, C, D. And this comes back, it's touching into over in this region. It's all red to the left, and it goes red, green, red. Yeah. And then you can see that that dropped a little bit lower. Yeah, you can see that that dropped a little bit lower. So putting it all together, did we go excess orange here? Yes, we did. Did we go outside orange over here? Yes, we did. We came back inside right here, came back inside of orange right here, and sell right there. Okay. Then we made a low here, and it came back out the other side and went excess orange over in here, and then it went outside orange here, and then came back inside here, and then a trigger right there. Trigger right there. Okay. Did it go excess orange over here? Yes, it did. And it went back out the other side. It did not defend and then came back inside over here, and it fires right there. Okay. It's all green to the left. Green, red, green. Yeah. Okay. So this one goes out, excess orange, and then comes back inside and comes back higher right there. Yeah. Green, red, green. And then fires right there for higher. This one, excess, defended orange. This is defended, yeah, defended, and taking it higher. How about this one over here? It went way down in here. You would have had to wait all the way over into here. And by the time you get the one going up, the bar's the wrong color. So you don't do that. You don't do that. Did I get this? Let me make sure I didn't skip it here. No. Okay, this is the first one. Wrong color. So you don't have a trade there. And then we go to the next page, starting in C here. You go A, B, C, D going down. Yeah, excess orange over here, defended orange here, and you can fire it. Oh, I'm sorry, right over here, excess orange, defended orange, and you can fire in here. Yeah, you can fire in here. And then I had excess orange and defended orange. You can fire in here. Okay. It ended up being a loser right there at the low. Yeah. And then you went excess orange here, and then you defended here. And actually, it would reduce the amount that you lost because you would have been able to catch on to that. And then excess orange here, and then going higher right here. Yeah. Green, red, green. Yeah. Green, red, green. Did it come back inside? Yes, it came back inside right there, and continues higher. Yeah. Continues higher. Yeah. It's possible that you could have fired this one right here, and that would have been a loser. Yeah, would have been a loser. I'm going to give some broad summary statistics on this. I'm using a program called Trade Markers to mark these. Yeah. Now this one, you could say, oh, well, what about this one? Well, it went red, green, red, but the momentum is going in the wrong direction. Yeah, it has to go in the right direction. So it made excess orange right here, came back inside, defended orange, and went higher right here, and that's the buy. Yeah. It does it again here. That's the buy. Yeah. Came lower, red, green, red, and excess orange here, and then triggered inside here. What you're doing when you do this process is you're rectifying these two things. Yeah, excess orange here, you were inside, green, red, green, and then you came to the inside here for the long trade. We've got a few more of them here. Now, I think that this doubled up some of these. This is the one that we just did. And then these, you could analyze those if you want. Even excess orange came back inside. That's possible you could have done that, but this was what we call an encompassing pattern. And it wasn't all green to the left, but you could still have considered this. It would have been successful. Yeah. And then you conceivably could have done this, but this is not clean cycling. You don't have the A, B, C, D. This went to the outside. This went to the outside. I've covered this in other videos. Encompassing patterns, you want to stay away from them. And then you come up, you go excess orange, and then it comes back higher here. Now, waiting for that is actually not the preferred way to do this. You could use other indicators, but I'm just keeping it very simple here, just using one indicator, the smart momentum, to show you how to do this. But you could actually front run that or get in earlier if you use trap trader oscillator along with it. Yeah, same here, excess orange, come inside and trigger right there. Green, red, green over here, excess orange, defended orange, come back inside right there. And then this is the rest of the day. Once you do this, you got some kind of encompassing pattern thing, and that's the end of it. So, okay. This is a summary. There were some trades that we missed and some trades that we would have been a loss. Yeah. But this is the rough idea. There's close to 90% winners here, 51 individual wins, 6 individual losses, about 89% overall. How's this working? It's taking a profit at 8 ticks, 16 ticks, and 24 ticks with a 12 tick stop loss and a 6 tick break even. Yeah, it's just that simple. So this is kind of, I don't, not proposing this necessarily as a system. I mean, obviously this is a trading system, but to me, this is more of a proof of concept because you could make this better. But these are the concepts that I'm trying to show you here using orange theory. Yeah, that's what I call it, orange theory. Yeah, so let's look at the next one. It's also, and it's always important when exploring new concepts such as these to ask questions like, what can I do with this information? Can I take it to another level? Is this a context for further learning? Are there other things that I could come to understand by understanding the market in these terms? Which is really what I started with is, getting that market structure concept down. But the orange theory can help you to understand market structure in a deeper and more profound way, if you take the time to learn it. Further, it's important to take these concepts such as these and develop them more fully into actionable risk management systems using tools and a technology like the 4-quadrant method that you can learn about on the homepage at IndicatorSmart.com. I could also add, as I had mentioned before, the Trap Trader Oscillator Advanced from IndicatorSmart to this system and turn it into a potential super system by being able to front run or even get in early or even before early, conceivably, using patterns in the Trap Trader Oscillator. There are tons of videos on using the Trap Trader Oscillator on the YouTube channel. The Trap Trader Oscillator is the equivalent of having a whole bunch of indicators all in one. It's not just one indicator. It costs a little bit more and it delivers a lot more. So it's one of our most popular indicators along with the Smart Momentum by far. I teach these and more advanced technologies and trading secrets and tips and associated nuances using these and other trading tools and NinjaTrader add-ons in my trading room daily. And I invite you to join us if this makes sense to you. If this makes sense to you. I used the following trading tools in the video today: Smart Momentum, which is what this is about, and in particular, lock stepping Smart Momentum with the Smart Super Renko price bars, red, green, red, green, red, green. And we use smart trade markers to mark the trades. I used to go through on the charts and mark the trades. It'd take hours to do that. With trade markers, I could do what I just did there in several minutes. So over the years, many have told us the Smart Momentum is hands down the best momentum indicator that they've ever seen. Why? Because it's designed by a proven trading championship winner. That's me, but also not, ringing my own bell or bragging, but it's because the technology that I based it on is predictive, and that's really the key. It's not because I'm a great guy, it's because I used technologies that are proven to be predictive in the way markets cycle and to get you ahead of what's going on. As really this whole video is a proof of concept of this simple idea. So there are many resources for the use of this great trading tool and other great trading tools and NinjaTrader add-ons at IndicatorSmart.com. And as I mentioned, this is a holiday edition for the July 4th holiday. I'm super excited for the holiday here. And look in the notes below for a super sale that we're having for some of the things that we have available at IndicatorSmart. Thanks for joining me for this webinar, and wishing you a wonderful holiday as well. And we'll see you again on the next one.